Hi everyone, let's go over my bullish and bearish monthly and weekly Elliott wave scenarios on Bitcoin. Starting on the monthly with the bullish scenario where we're looking for a multi 1-2 scenario, looking for a blue wave 1, then a wave 2 and continuation to the upside. Based on the previous bull markets, we can estimate the target for this blue wave 1. You can see that previously the 0.618 trend-based fib extension played an important role, and therefore it is on my chart once again. The 0.618 at 104k, and for a bit of flexibility I also added the 0.786 at 180k, with the fibs taken from the low to the high of the previous bull market to the low of the previous bear market. Now time-wise, we can use fib times and also once again compare previous bull markets with one another. The 786 was quite nicely respected for the yellow wave 1 here, ending the bull market just before, and the green bull market here was exactly the same amount of time as the yellow bull market. So therefore, I once again have the 786 and the 1-to-1 on my chart taken from the same pivots as the trend-based fib extension targets over here for wave 1. The low to the high to the low, giving us a time target between March 2025 and October 2025. On the weekly time frame, we're then looking for an impulse to the upside here, 1, 2, 3, 4, 5, currently working on this wave 3, where internally we have the green count, 1, 2, 3, 4, and then eventually a wave 5. Common target area for your wave 4 is between the 382 and the 05 Fibonacci, taken from the low to the high of 3, giving you a target between 57.6 and 53.3k, with the invalidation for this wave 4 being the 0.618 at 49.3k. After wave 4, we then look for price to move to the upside in a wave of 5. This target is between 78.6k and 110.6k. Depending on the lower time frame impulsive structures, we can get more specific as we get more information. After the yellow wave 3, we're looking for a retracement in 4 and continuation to the upside for a final push in wave 5, ending the bull market. The bearish scenario on the monthly chart is that we have finished an impulsive structure to the upside at the previous all-time high and look for a bigger 3-wave corrective structure to the downside, where the 0.236 would be a maximum target at about 6k. Preferably there's a wave 2 in this case, as we're looking for a wave 1, 2 and then a 3 continuation, ends after the 0.382 fib time, which is sitting on September 2025. On the weekly chart, your bearish scenario therefore becomes a regular flat, a 3-wave A, 3-wave B, and then you have to look for a 5-wave C. The regular flat target is between the 1 and the 105 Fibonacci, taken from the high to the low of your wave A, which has been hit over here. However, we're then looking for an impulsive structure to the downside, and if you have been following along with the daily updates, you know that the probabilities for an impulse down here in the wave 1, 2 and then the 3, 4, 5 to the downside are very low compared to more bullish scenarios. Therefore, this scenario can only really start to increase in probabilities if we at least hit 49.3k, but preferably 38.5k as a minimum. The common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target between 16.5k and 11.6k, with the extension target being the 1.618 at 6.5k. The best area of support is between 9 to 10k. We have a golden pocket here taken from the low to the previous all-time high, as well as the value area high of this multi-year volume profile at 9.7k. Preferably, price is not going to drop below the value area high at 49.5k of the volume profile taken of this range over here. You can see it is very nicely respected, the value area low acting as resistance, moving up to the value area high, point of control, and then breaking out. If price moves back below 49.5k and gets acceptance in this range, then the probabilities are very high to move to the point of control, which pretty much invalidates the bull market at this stage. So we don't want to move into this particular range. This channel is also interesting support at the moment. It is taken from the low to the first time touching 30k, and price moved up, ranged on top of the midline, hit the top line, midline broke out, and then retested the upper trend line here. Currently, the trend line is sitting at about 62.3k, and next week it's moving up to about 63k. You don't really want to lose this upper trend line, and if you do and start to close candles back inside this channel, the probabilities increase to move towards the midline, which means the probabilities increase to then move towards that 50k, 49k level. If you then finally look at the probabilities, then at the moment on both the monthly and the weekly time frame, the probabilities are much higher for the bullish scenarios compared to the bearish scenarios. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.